Can you all see my screen fine?
Yeah.
Perfect.
So since you're going to be sending this out, I have a resource that I find useful. Could I send that to you in PDF that you could send to everyone?
Yeah, absolutely. We'll be sending a follow-up email to all of the participants so we can include any resources that you have in that email.
Great.
Cool. All right, we've got folks joining. We'll give it another minute or so to let a few more folks join, but welcome everyone that is joining for the event. We'll start in just a moment. All right, well, we're going to go ahead and get started. So thank you everyone for joining us today. On behalf of the University of California, Riverside, thank you for tuning in today for our Life After College event focused on understanding your credit score and credit cards. My name is Brock Cavett, and I am the Director of Young Alumni Engagement at UC Riverside, and I'll be your moderator for this afternoon. Life After College series is a new series focused on supporting recent graduates and young alumni in their transition to life after college by focusing on life skills not always taught in the classroom. For today's event, we are excited to be joined by 3 UCR alumni who will share their experience to help you gain a better understanding of what credit is and the best way to build it. This program is made possible by the Ucr Alumni Association. I encourage you all to take advantage of all the great things the association has to offer, from our virtual and soon to be in-person events to getting involved with your local alumni network. Visit alumni.ucr.edu to learn more. Throughout today's session, you'll have an opportunity to ask questions of our speakers by clicking the Q&A at the bottom of your screen. I'll try to answer as many questions as possible during the second half of today's event. For your reference, we will be recording the session and we'll send it out after the event in a follow-up email, as well as some resources from our participants today. We will begin today's event by learning a bit more about our 3 panelists. We'll then move into a conversation where we'll address your most pressing questions. So we're now going to shift our conversation to learn a little bit more about our alumni joining us today. I'm pleased to be joined by our 3 panelists, Chang Liu, Francesca Braniger, and Lena Alonso. I want to start with a few of the questions we received in advance of the event, and we'll then shift to answering some of your questions on the Q&A. Again, a reminder to submit your questions down at the bottom in the Q&A function. So now the privilege of introducing our speakers this afternoon. Chang Liu currently serves as the Senior Credit Analyst at Simmons Bank in Springdale, Arkansas. Chang received her BS in Economics, International Economy and Trade from Central South University in Changsha, China, before coming to UC Riverside, where she received her MBA in Accounting and Finance. Her specialties include corporate lending and customer services, credit analysis, trade services, and business analytics. Thank you for joining us today, Chang.
Thank you.
Next up, we have Francesca. Francesca Braniger serves as Managing Director, Underwriting and Credit at Money360, and is responsible for the oversight, screening, and underwriting of all incoming new loans. Prior to joining Money360, Francesca worked at SunWest Bank as Vice President, Senior Relationship Manager for CRE Bridge Loans, and prior to that was Vice President at Wells Fargo in a credit role specializing in owner-occupied real estate. Her experience working at various financial institutions in both business development and credit roles allows her to be credit-focused but sales-conscious. Francesca has served as the president of CREW Orange County, as well as in other board roles with CREW. As a member of the NAIOP YGP class of 2016-17, and currently serves on the Community Health Committee for Mission Hospital. Francesca earned her MBA from Loyola University and a double BA in Sociology and Business from University of California, Riverside. Most recently, she got a certificate in commercial real estate from Cornell University in 2018. We are so excited to have you joining with us today, Francesca.
Thank you for having me.
And then our last panelist is Lena Alonso. She is the manager for the Financial Wellness Program at UC Riverside. A proud first-generation student-parent college graduate, she received her master's in education and student affairs from UCLA and bachelor's in ethnic studies and Spanish from UCR. In 2020, she became a certified financial coach under the Center of Financial Social Work. She's passionate about working with college students and equipping them with quality and holistic financial education in order to transform their relationship with money and take control of their finances. It's her hope that our program can help empower students to feel more financially balanced and prepared for life here at UCR and beyond. Thanks again for joining us, Yasleen.
Thank you.
And thank you all for joining us. We're super excited to have you here with us and be able to share your expertise on credit and to be able to connect with all of our UCR alumni and students joining us. And so we're going to go ahead and dive into our prepared questions, and the questions already submitted from our participants. But again, be submitting your questions as you have them throughout the event. But we'll start off with a pretty basic question of just, on a very basic level, what is credit, and what are those different ways that build it? So I'll open it up to our panel and whoever wants to answer first.
So I would say, to kind of make it relatable to students, is a credit report is kind of like your report card, right? It's what people can see about how you treat credit responsibly. So were you a good student? And a report card is a way for people to see that, right? And so a credit report is very similar in that it's a way for someone who doesn't know you or your story to assess your situation. There's lots of ways of building credit, starting out with a credit card. And so it's important to know when you are applying for credit, if they report credit. So a lot of times if you've rented an apartment, they pull credit and they will look at your credit, but they don't necessarily report to credit agencies that you've paid on time, right? So, but credit card companies do. Loans, car loan companies, they will also. And so those are great ways to take out loans and make your payments on time, and that helps build credit. And it might be really hard to get a car loan, for example, if you don't have credit. So a great way to build it is by taking out a credit card for just a small amount, $500, $1,000, and slowly build it with that. And over time, show that you can make your payments responsibly, you make your payments on time, you're not late, but also making more than the minimum amount. And we're going to talk more about payments later on, but the first way to build credit is to have a small credit card. I think is a great way to start.
Thanks, Francesca. I think that's a great way to kind of kick us off and to just give a broad understanding of credit. And that's how I did it, was a small $500 credit card to begin. Yasleen or Chang, do you have additional thoughts on that?
Yeah, I think credit, to put it simple, just if you want to buy something today, but you don't want to pay the full amount, and then you pay by credit. I do want to mention that since from an international student's background myself, not every country has this kind of credit reporting system. So some of the students coming from overseas or other countries, they may even, never heard of like what is a credit report, what is this kind of a system. But in United States, we have this. This is associated with your social security number, and you can kind of like record it all your, that's like Francesca mentioned, car loans and house loans and credit card, all this kind of stuff. So the basic thing I think at the very beginning you need to know is this is a very important thing if you're gonna live good and well in this country, and this is gonna be a very important foundation for your future study and work.
Yeah, I would add at its core, credit really is money borrowed with an understanding that you're going to pay it back, sometimes with interest, right? And like Chang and Francesca have said, credit cards are really one of the easiest ways to build credit, but there's also other forms, right? Many of you might have taken out student loans. That's another form of credit. And so if you've taken out an unsubsidized loan, I don't know if this was your case, but when I was an undergrad and even in grad school, I tried to pay the interest just at least on my unsubsidized loans. And that way that helped me build credit. So that's just another way. And there's also, car loans, there's personal loans that you can take out. If at some point down the line you want to buy a house, you might have to take out a mortgage. So that's another form of credit.
Thank you all for sharing. Again, I think that's a really great kind of overview for folks that may not really quite understand it yet. And so you all kind of started to allude to this, but why is it important to have credit? Is it required? Is it something you absolutely need to have? Anyone has initial thoughts on that?
Yeah, I think it's almost vital to survival in our country, with the cost of homes being what they are. A starter home, $300,000-$400,000 in Southern California at least, and also car loans, right? So unless you're going to pay cash for your car, you need to take out a car loan. And so I think it's vital even beyond that, though, because as someone in finance, my employer pulls my credit before I can even get a job. So even when I started out as a teller, they wanted to make sure that I was financially responsible and that I wasn't going to try and, steal money or take money, and that I could be trusted with finances, right? And so I think it's really important that you have credit, not just for the future for what you want, whether it's car or house or credit cards, it's for employment as well.
Yeah, and I really want to recall what Francesca said on the employment side, because I didn't know about that until I tried to apply jobs with a bank. They actually pull your credit report and check your background, and they want to make sure as an employee, you take care of your financials, then you take care of the customer's financials. As an international student, when I first come to America, I think, why do I need a credit if I pay cash for a car? I'm not gonna buy a house soon, so I don't see why I need a credit until I need to rent my apartment. So they need to run your credit, and I don't have a credit at all at that time with just come to America. So I need to put like a sizable deposit to just secure that place. In that case, if you have like a really good credit, I think your deposit can be significantly lower than what I paid. So since then, I think credits, you cannot say that this is not important, because it's actually counting every aspect of your life: cars, house, employment, renting a place, all kinds of places. So.
And then just to add on that, I know it does sound a little bit counterintuitive, because credit really is like, you're basically getting more debt, but it's really about how well you can manage that debt, right? And so just like my panelists have said, you do need credit in order to, down the line, you're thinking about buying a house or you want to move out, like they do run these credit checks to make sure that you are financially responsible.
Thank you all. And I think that's really important for folks to realize now, if you are either, getting close to graduation, or if you just graduated, and you may not realize that, it's important now to be understanding and learning about this. So we're really excited for all of you that have been able to join to be able to learn a bit more about this. So you've all, mentioned the term credit score, and obviously we all have one of those. Can you share about, a bit more about what, a credit score is, what is a good credit score, and, what all kind of goes into that specific score that all of us get?
I was going to give someone else an opportunity to answer first, but go ahead, Chang, go ahead.
Okay, I think, correct me if I'm right, I think the range is about from like 300 to 850, if I'm right. But from a bank's perspective, because I do commercial loans, we typically need at least 640. I know different banks may be different, but we typically need at least 640 for a loan. And usually if you have more than 780, we think that's really good. So seriously, we don't typically look anything less than 600. So that's the reality at my bank, at least.
Yes, and your score, go ahead, Yasleen.
No, you go first.
Okay, so there's 3 reporting agencies, right? So that take the information that creditors, so banks or a car loan place, maybe Honda, or Toyota, right? They report, and they report to these agencies that collect all this information, and then it kind of goes into a formula, and they kind of calculate it all a little different, but come out with very similar scores. So from 3 agencies, you could have a score of 715, 721, and 730, but they're all kind of within that same range, right? So so your credit score is the final output of all this information, but your credit report actually goes through every item, and it'll talk about your it kind of group your credit cards together. It groups your, you know, any mortgages you have and your installment loans, like your auto loans, together. And so it takes all that information. If you've ever been late on one, it talks about how many lines you have open. You have 17 credit cards, or you have 1 credit card. You know, you have 17 credit cards and they're all maxed out, or you have 1 credit card that has a low balance. So it takes all that information, and then it produces an output, which is your credit score.
Yeah, and I can go ahead and talk about what are the factors and how a credit score is really generated. So the biggest chunk is your payment history. That's 35% of how a credit score is calculated, right? And so what this means is that if you can, try to make these payments on time. And in case you do have a credit card, try to pay the full balance. If you can't, that's okay. At most, just pay at least the minimum, but just make sure that you're making these payments on time. And then the second chunk, which is the 30%, is how much you're using credit. So I always tell students, you know, whatever, if you have a credit card, try to use only at least just no less than 30% of your credit card. And this goes across like all of the credit cards. So if at some point, say for example, you took out a credit card that was $1,000 in limit, in theory, you can spend $1,000, but if you're trying to raise your credit score, then just stay at 30%, so $300. And then if you end up adding more credit, then it's, you know, your limit increases. So then it's 30% of your total credit limit. So that's that point. Another point is, I believe, the 10% in new credit. And so typically we try to tell students, space out how much credit you're getting. So if you took out a credit card today, wait about 3 months or so until getting a new one. Another component, I believe, and correct me if I'm wrong, any of you, Chang and Francesca, 10% is, I'm blanking out. Anybody want to help? I'm blanking out right now.
So I actually have a really great resource that I can send to Brock that goes over the calculation and the factors of what each thing means. So I'm happy to send that around so everyone has that as well, because I don't know off the top of my head.
I think one of the things is how long from your very first credit, say from your very first credit card. So the history of, that's why you may not want to close the very first one you have. If you have that for like 5 years, 10 years, that actually going to help you.
Yes, that's true. I often get a lot of questions like, hey, so I don't use this credit card, can I close it? I mean, you can, but you know, try not to close your oldest account, because if you do end up closing it, then that history on your credit report is no longer on there. So try to have your unused accounts open if possible.
And don't try to, you know, fall into the traps of like, if you open a new credit card, you get a mileage, you get like a $200 or whatever, and then you open like 10 cards in say 1 month, that's going to hurt your credit score.
Yeah, the number of inquiries that are on an account can also hurt it. Every time that your credit is pulled, it kind of knocks your score down 2 to 3 points. So doing it one time, it's not going to make a material difference. Doing it 10 times could really knock you 30 points and could knock you into a different, you know, a lower tier in terms of your score. Another tip for building credit, this is a really great tip that I have given to many people. You want to make sure that creditors see your responsible use of credit. And so you want to prove yourself. And so, for example, let's say you have a $1,000 credit card, and let's say they report on the 1st of each month. So you take out a credit card on the 5th. You get your credit card on, and then you put a gallon, or not a gallon, a tank of gas, $100. You put $100 on your $1,000 credit card, and then you pay it off the next day. Well, then during that time, have you used credit responsibly? Yes. But what do the credit agencies see? If that credit card company is only reporting on the first of each month, they're going to see you had a zero balance on the first of this month and a zero balance on the first of the following month. And so in order to build credit, rather than paying off everything immediately, let's take that same example. You get your credit card on the 5th, you put that gallon or that tank of gas of $100. I would then if the minimum payment for that period is, say, $25, I'd make a payment of $35. So you're showing you're making more than the minimum, but don't completely pay it off, because they want to see that you have credit out, right? And then the next month you have $25 minimum payment, maybe pay it off then. So that's how you slowly build it, is making more than the minimum, but not fully paying it off, so they can see that you are using it, but you're not maxing it out. So there's a couple angles that you're building in that situation.
Yeah.
Thank you all. I think that's super. Sorry, Chang, were you going to say one more thing, or?
Yeah, just go ahead. Yeah.
Well, thank you all. That's super helpful. And I think especially at the point of, having that initial card that maybe you don't use anymore still open. I think that's a great tip that I was recently told myself and I'm using. Don't use it, but so I think that you've all provided some really great insight into what that looks like. You've all talked about, this credit report and what that looks like. How would someone go about, and I know, Francesca, you mentioned not pulling it all the time, but like, what does the process looks like to be able to pull your own credit score and kind of see what that credit report looks like, or what ways would someone go about finding that out?
So there is a website called annualcreditreports.com. It's the only, I think it's the only official site, like every year you can pull once to just get an inquiry to see your credit report, to see if there is error or not. So you can just get to this website and I guess put a username and password, and you can put that one year. This is the most official one. And there are other ways, say, normally if you have a credit card, most of the banks, they offer you like a free credit score check or something like that. You can just go through that portal, you can see that. The other one is a common website called, I think it's called Credit Karma. You can just, it's a website saying you just register, it's free, and they give you a credit score they update constantly. So this is not the official one, but still I think the credit score is very close to the official one.
Yeah, I will add that with annual credit report, you get a free report every once a year. So what I do is I go ahead and log in and I save those documents, and then it'll have the date at the top. So that way, a year from now, I know when to check it, because I think you might have to pay extra if you want to check it after your free one is up. But yeah, if you want to check your credit score, those are free. Like Chang said, you can go on creditkarma.com. You can also check on your banks. If you have like a Chase credit card, usually they'll give you like your free credit score.
So we learned a lot about, building credit and, the basics of credit, but what if someone, has already had some bad experiences and at this point, has some bad credit? How would someone work through repairing any bad credit that they may have accrued over time? Thoughts on that?
I think people are, I say this with caution, but the credit reporting agencies are, they can be pretty friendly sometimes. And so if you just write a letter to them saying, I have paid this off. I ran into bad times with COVID. I suddenly became unemployed. I was helping family with a medical issue, whatever it may be. You can ask them to remove this from your credit report. Sometimes they do it, sometimes they don't. Sometimes if for example, it's been paid off but there's still something that's showing up, you can provide them proof. Maybe they haven't, mistakes happen. So you can provide them proof that you've paid this off. And even, you know, if it's a judgment, let's say, you can say, I've paid this off, please remove this. You know, this is hurting my future and, you know, in potential employment. They might be able to work with you and help you in that. So that's certainly one way, is just writing those credit reporting agencies.
So I think it's very important to actually constantly monitor your credit score at the very first place. Then you know your credit score go bad. And not 100% of the time, because it's really something you do. Sometimes, you know, people have same names or whatever, like a bank have mistakes, and you may have someone else, you know, that on your credit report. That's why it's very important you constantly monitor that, so you know if there is something happen, you need to check and make sure you don't have like an identity theft or whatever, like things like that. And then if you do have bad credit, you just need to find out why. Say if you have 5 credit cards, you have high balance on that, you cannot pay that off. You can think about other ways, like what if you consolidate all this credit card debt into like a personal loan? Because credit card interest is mostly like 20%, 22%, something like that. It's really high, and it's drain your money so quick. If you can put it together for like a personal loan at 5% interest rate, it's really going to help you a lot. And even you want to repair a bad credit is not something impossible to do, but that do take time, at least a few months.
Yeah, another way I would say, if you're in that position where, you know, you've checked your report, you've already tried paying off all of the debt, and your score is still low. One way you can try to increase it is by taking out a secured credit card. And so what this is basically you're the one setting the limit, not the bank. So say you go into Chase and say, hey, I want to take out a secured credit card, but my limit is $200. Again, like I mentioned earlier, that 30% still counts. So 30% of 200, that's how much you can spend. And that slowly will increase your credit score. Another way too is maybe to ask, you know, someone that you trust, a relative or a friend, to be added as an authorized user. And so what this is basically you do have permission to use their credit card, and their report will show up on your credit report. But just be cautious of this, because, you know, if that person falls on hard times, then that will also reflect on your credit report. So these are just some steps that you can take if you are in that position. And just know it does take time. I know it can be really frustrating, but slowly you can increase your credit score.
And I just want to stress the importance of starting out with good credit, because it's going to be a lot easier for you to build it. Kind of like a GPA. Think about if you started with a 2.0 GPA versus if you started out with a 4.0 GPA in your very first semester, right? It's gonna, you know, every action from there is going to make it harder to pull up from the 2.0. And so it's really important to start off with good credit, because it's going to continue to be easier to build it and boost that score versus starting with a lower score. So as you are going out into the world and you're making financial decisions for yourself, I really stress the importance of making sound financial decisions and not overextending yourself and getting yourself in a position where you think you'll be able to pay it off, but you then cannot, right? Don't go out buying drinks for everyone. Don't go out, you know, shopping and buying things that you don't need. Really do things cautiously and very intentionally. Going back to my example about the gas, if you put $100, you fill up your tank of gas and you put $100 on your credit card, I would have that $100 in cash ready. So that way, knowing I will be able to pay that off, and that me not paying it off right away is a very intentional move to build credit, and it's not because I need it at that point. So as you are building credit, be really intentional and thoughtful with what you're doing, because it is so much harder to pull yourself up from a bad credit score.
That actually leads into one of our questions from the audience I'm going to dive into of, we've talked about it takes time, how slowly or quickly do credit scores change? And I know that may be an obscure question, but does anyone have any kind of thoughts on, kind of what that looks like?
I think they change daily. So if you're at 720 today, you could be at 721 tomorrow. You could be at 714 tomorrow. But a big shift is, it's like steering a ship, right? Like it's not a zippy little speedboat, right? Like it takes time to keep turning and you know, changing the direction of that ship. So it does take time. And so there's no definite answer I could give in terms of, oh, do this for 3 months and you'll see a change. I think it's a very it's time consuming. You know, it takes time, it takes patience. But think about it, if you are consistent and you know, through a 3 to 6 month really disciplined financial behavior now can really provide you benefit for years and years down the road. So 6 months now is actually a really short amount of time for the length of time that it'll actually benefit you.
So I think it's actually every time when you have a borrowing activity happen, say if you take a car loan, that's going to reflect on your credit report, but not immediately, because the institution, you know, the car loan place, the banks, the financial institution, they still need time to process and reporting this to the agency. So say you may take a car loan today and you're not going to see that on your credit report tomorrow. It may take a month, maybe 2 months. So it takes time, but it's still changing every day, but depends on when you have that borrowing activity happen.
All right, well, we're going to start diving into some more of the audience questions. We've got quite a few at this point. So a reminder to submit your questions at the Q&A section at the bottom of the screen. But this first question, anyone can answer, but I think it's probably more geared towards Chang. Are there any limitations to credit card use for international students? For instance, credit cards other than ones that are directly related to banks?
Okay, so as an international student myself, when I first come to the country, I have no credit at all. So once I get my social security number, I just went to I think I go to UCR, the credit union, and also a Bank of America branch, I think near the campus. They wouldn't give me any credit card because I have no credit score. So I like the idea about the secure credit card thing. So I actually put down $1,000 cash and then get my very first credit card. And then, but the 1,000 is my limit. But I build that slowly over time. And I think it's take at least a few months to actually start building that. The other way is the good thing about the UCR credit union, because, you know, as a student, and usually credit union give you a little bit more leeway than the big banks. So I think I take my 2 credit cards from there and build my credit from there.
Our next question is from Dominique. And she asks, does having your own phone line with a cell phone provider help improve credit? Really just asking, you know, what kind of bills, you know, go towards credit, what doesn't? Because obviously, you know, car payments is one, but, you know, phone bill, you know, what do any of the bills that you're paying go towards building credit?
Unfortunately, probably not, but they can go towards hurting your credit. So for example, your phone bill, your cell phone bill, every month, it's not going to say that you made your payment on time, but if you don't make your payment and you don't make it consistently, and they send it to a collection agency which is a third-party agency that will help try and collect past due debt. So if it goes to a collection agency, it could hurt your credit. So it doesn't help it, but it could hurt it. So credit cards are a good example. Student loans, those go towards, as Yasleen said, car loans, mortgage loans. Those are all agencies. Those are all organizations that report to credit agencies.
I do want to add, so I did some extensive research for a presentation that I had to give on credit. And there is actually a free service. It's called Experian Boost. And what this is that you can actually build credit for any of your utilities, your cell phone and streaming services. I'll actually go ahead and include it in the chat so that way you all have the link. But I got really excited. I was like, oh, this looks legit, because Experian is actually one of the credit bureaus. And I remember I had told a friend who it has this aversion to credit cards, no matter how much I tried to kind of give him the information and demystify credit cards. He's like, no, I'm not getting it. And I told him about this service. He's like, yeah, actually, I use this service and this is my way of building credit. So there is that option. What this is I believe you just link your bank accounts. It's a pretty easy service. But yeah, the link is in the chat box. Go ahead and take a look at it. It's free.
Cool. All right. Our next question is anonymous, but says, how do you know which credit card to get? I oftentimes get offers from companies in the mail all the time. I'm never sure which to establish a card with. Is there some sort of general rule for opening a credit card with a bank? And I agree, I get those all the time. And so I think that's a great question, because it's hard to know which one is the best one for you.
Yeah, I feel like we probably all get those, and you just don't, is this a reputable company? Are they going to steal my identity, right? So do your research, just like everything else, do your research. And then when you're thinking about the benefits that you want, do your research on that. Is it miles? Is it cash back? Do your research and know what you want. There's a resource I personally use. It's the Points Guy. And so he's really great with breaking credit cards down and what the benefits are. And so, there's many times to receive benefits, there's annual fees. So you have to think about the cost benefit. You do a cost benefit analysis. So if the cost is $85 a year for this credit card, am I going to get more than $85 worth of benefit out of it, right? So that's for you to think about and assess for yourself. But that's one resource that you can use to help think about the benefits and what you're looking for in a credit card.
Another great website to compare credit cards is nerdwallet.com. I really like that website. So like Francesca said, if you're trying to decide what kind of credit card to take out, that's a really great one to compare.
You maybe either of you share a bit more about some of those, miles, or, I know personally I have a Marriott points credit card. Like, what does that mean? What does that look like? Because obviously some folks who've never had a credit card may not even realize that they can get some benefit outside of just their credit score with various different cards. So would anyone be able to share a bit more about kind of what that means, what that looks like, depending on which credit card you're looking at?
Yeah, so I'll just say, like, I have a Costco credit card, right? I've got an 8-year-old and a 6-year-old. And so I go to Costco a lot. And so I get certain points for every dollar I spend at Costco. I get cash back. But then also, what I spend on gas, I get a certain amount. What I spend on travel on that card, I get a certain amount. So let's say, and I'm just saying off the top of my head, I don't know if this is true, but for example, if I use Costco gas, I get like 2% back. If I use any other, if I use my card at other gas stations, I think it's 1%. So there are perks for using your card at certain retailers for certain items. I'm sure, like with the Marriott, you probably get a certain amount of points for using it at a Marriott versus using it at a Hilton, right? So there's points that you can use. So for travel. And so my husband's business has a Chase card, and with that, there's certain points that then he uses. He cashes in for hotels, so he can use those points at certain hotels, and he has his hotel stays for free. So, again, that's part of doing your research and what makes sense for you and where you expect to spend your money and what sort of benefits you're looking for. When I was younger and I had so many weddings that I was going to at that point, and I was flying all over the country, it seemed like every month. At that point, I was using my my American Airlines credit card so I could get miles for American Airlines, and you cash that in and get free flights. And then as I was also flying, I was earning mileage. So I was just trying to do anything I could to get free flights because I was flying all over. So it's thinking about what is important for you and what makes sense for where you're at in life.
I think the other thing is you're not gonna get whatever card you want because they do have like a credit score threshold. And some of the card actually, they do require higher credit scores. That's why I really like the Nerd Wallet and the Points Guide. They actually give you kind of like a range thing, say you have to have actually this much credit score to get this card. So I think do research first is very important. Know what kind of card gonna benefit you and to see if your credit score actually gonna fit in that range. But talking about the very first credit card, from more like a student's perspective, I would choose a no annual fee card because some of the cards have great benefits, but they do ask you for annual fee, like a $200, $300. It's actually a lot if you're a student. So starting with a no annual credit fee one, and then find a very good company, a big like a Capital One, CT, Chase, whatever the reputable ones. And if you want to go something simple, just choose cashback. Cashback, some of the card is like whatever you purchase is 1% cashback. And some of them are like a different categories. You have to say pay gas station, supermarket, things like that. Some of them are mileage. I personally do like the City Double Cash. They pay you 1% cashback, whatever you purchase. And then once you pay back in full, they give you another 1%, so 2%, whatever. So it's just like an easier no-brainer credit card.
All right, our next question is from Amber, and she asks, does rarely using your credit card affect your score? Anyone have initial thoughts?
I mean, you're talking about use that like a once per year or like a once per month. Because the reality is if you don't use a credit card for a very long time, some of the banks do actually close your card.
Yes,
Yeah,
you were going to say something?
Yeah, I was just going to say, it goes back to that formula that I mentioned, how try to keep your accounts open as possible. And so if you don't use a credit card, like Chang said, sometimes they might end up closing it. So rule of thumb is maybe just use it, set a date on your phone or calendar and say, okay, today I'll just use this credit card. That way they know it's active. So you don't have to use it if you don't want to use it, but those are just some tips to try to keep the account open before the bank decides to close it.
All right, our next question is from Luis, and he asks, if you've never taken out credit before, would you have, if you've never taken out credit before or a credit card, would you have a credit score, or what would your score look like if you've never, had student loans or a credit card?
From my, what I remember at the very beginning, since I have no credit at all, I think they give you like a starting credit score. I can't remember exactly. I think it's like 500, 600 something. It's not high, but it's not 300. And then you have to build from there.
All right, so our next question talks about interest. How bad is the interest when you start the first time? That's my concern. So can you share a bit more about what interest looks like and kind of how that differs, and if there are ways to, kind of the best way to look at cards in regards to interest?
Yeah, that's a really important question, because I think that's where people can really get into trouble sometimes, is because there might be an introductory rate of say 5%, right? Which sounds great. But then if you don't pay everything off within say 6 months, then all of a sudden you're charged 25%, right? So it can really be troublesome. And so I think it's a really important question to know what to expect. And so I think most credit cards are probably in the 10 to 18% range. as you're starting out with credit, they're probably, because you're probably seen as a little bit riskier, since they don't know if you're going to be financially responsible or not, right? So that you're going to be kind of seen as a little bit riskier, and so you're probably going to be in the 15 to 18% range is my guess. And so know that, but know that that's it's important to look into what the introductory rate is. If you put, for example, you put $1,000 on, but you've paid off $600, so there's only $400 left over, and that you haven't paid off, is the back interest that you're going to be charged. Is it on the $400? Is it on the $1,000? It's important to read the fine print, which I know can be kind of boring and it can be a lot, but that's where it's really important to take the time to understand exactly what to expect with your credit card and with the interest rate in terms of an introductory rate versus what to expect going forward as well.
I think one thing to remember is you don't need to pay any interest if you pay them off within one cycle, like typically like 1 month. So if you just want to build your credit, but you don't want to pay any interest at all, you just pay that off, pay the whole amount off every month. And nowadays, most of the banks, they have auto debit features with your card. So you can just link the credit card account to your checking account and set a date, and then every month at that date, and they're just gonna pay off everything. So it's very easy.
All right, so switching over to a little bit more about kind of student loans. So we have a attendee ask, I've never taken out a credit card, but I have paid off interest on my student loans. For us students or recent graduates in that position, is this building credit for us?
Yes, so if your loan was the unsubsidized loan, so just to recap, unsubsidized loans, interest does accrue while you're in school, unlike the subsidized. So if you have a subsidized loan, that means that the government is paying for that interest while you're in school, or at least enrolled half time. So if you already graduated and you took out an unsubsidized loan and you're paying the interest, then yes, that is a way of building credit. You just know that you do have a grace period of 6 months, meaning you're not required to make any payments towards your student loans, but interest does accrue on the unsubsidized loan during that period. And so if you are paying at least that, then that is a way of building credit. I hope that clarified a little bit. I know it's a little bit confusing, but just know, yes, it is. That's the short answer.
So another question kind of regarding student loans is, do student loans or medical expenses give a negative perspective to renters or car sellers? So I guess it sounds like this person is asking, does having, a large amount of student loans that you're paying off, does it ever give like a bad perspective to some of these folks that are lending you credit, such as, a car dealership or whatnot? Does that make sense? I believe if this is an anonymous question, so if you have, any further clarification, you can submit that. But it sounds like really just, just having a lot of debt, if you're managing it and paying it off, but you still have a lot of it, does that look bad to folks, to lenders?
I think.
Go ahead, Yasleen.
I was just going to say, I think it just comes down, like if you have, I don't know, $50,000 in loans, but you're making those payments on time, then it's going to show to the lender you are financially responsible. That's really what it boils down. I don't know what you want to add, Francesca.
Yeah, I think the medical expense question is medical expenses are unique in the way that people look at them, because a lot of times medical expenses are not something that were an option for someone, right? And so if you need, if you're in a car accident and suddenly you have all of these medical expenses that you've incurred, obviously that wasn't an option to that person. And so medical expenses are looked at differently versus running up a $10,000 credit card at a variety of stores, which that person did have an option or, you know, to do or not do. So every creditor is different. That, you know, where Chang works, they're going to look at credit a little bit differently and things that are important for them. But if I saw a medical expense that hadn't necessarily been paid on time, I wouldn't look at that the same as a mortgage, for example, that wasn't paid on time. I do look at those differently, and I assess things differently. So I don't look at them. I don't look at a medical expenses negatively as other expenses that haven't been paid on time.
Yeah, agree with what Francesca said. One thing about medical collection is it's very easy that you don't know it's actually there. We've actually seen lots of our borrowers, they earn a lot W-2 wages, but they have like a $200 medical collections on their credit report, which drag their score really like from 800 something to like 700 something. So it's actually, if that goes into collection, even if it's just $200, it's really gonna drag your score a lot. So pay attention to, like, every time when you see your credit score have a big change, and find out why. And don't let this 200 just ruin your credit report.
That's good advice. And yeah, I think medical expenses are one of those things you don't really think about when it comes to this, because like you said, it's things that you don't really plan on paying for. So thank you for touching on that. This next question does kind of get at, you know, like you said, it really kind of depends where you're looking, and everyone's obviously situation specific for them. So they ask, you know, I've always heard the 10% rule in terms of spending, but as Lena mentioned, 30%. Is the 10% rule outdated or just not as beneficial to building credit? So can you maybe give a little bit more you know, context of to like that 30% versus 10%, or kind of some of the differences in what folks should be, you know, looking at based on their own situations?
Yeah, just to clarify about that. So 30%, I would say it's like the maximum limit, right? So again, going back to that example, if you have a credit card where the limit is $1,000, and you're trying to have a good credit score, then try not to spend no more than $300, because that's 30%. But I have heard about the 10%. So if you're trying to kind of even limit more of that, then yes. So just anything below 30% is where you want to stay at when you're using your credit.
All right, so we've got a few more minutes, and we will, just to prepare our panelists, ask each of our panelists to give us one kind of just lasting piece of advice before we go. So let's kind of be simmering on that, but we'll get another question or so in before. So looking at student loans, will paying my student loans all in one hurt my score, or should I be paying partially over time?
I feel like that's an answer that I wouldn't feel comfortable not knowing the amount, not knowing the interest, not knowing, there's so many factors that go into that. And so I would hate to say, pay it all off, and then it doesn't help your score, but I'd be hesitant to say, pay it in installments, but then you're accruing interest. So I think that there's people out there that you can talk to, that you can talk to them about your personal situation, your personal income, expenses. There's something called a debt to income ratio. So generally banks, when they're looking at what someone's credit worthiness is, they're looking at your credit score, but they're also looking at something called a debt to income ratio. So they're looking at debt of 40% to 100% of your income. So, you know, that's something to think about as well. But I don't feel like there's a straight pay it off or do it in installment answer that I personally would feel comfortable advising you on. So I think that you should talk to someone. If you are in the financial situation to pay it off, I would certainly talk to someone about the best use of your funds.
Yeah, I agree on that debt to income ratio thing. That's all the banks looking at. So if you have student loans, if you have balance, then it's one line item on your debt. So you have all different debt, car loans, housings, and student loans, and then all add up together. as your total debt. Then the bank will calculate what is your total debt, what is your income, your W-2 wages, your tips, whatever, and then they compare this to see like how much room still left for you to borrow. That's the basic idea behind how bank loan money. Talking about the credit score, I think different categories might have different impact on credit score. I'm not 100% sure how that calculated, but I would guess student loans and credit card and car loans might be different maybe when they calculate the credit score. And when you're thinking about paying down them, you need to lay out all the cards, say what the loans already have on your hand, car loans, credit card or student loans, what's the interest rate are, and what would make sense to pay first. So I think I like that idea that Francesca said, you would need to consult with people with that knowledge.
All right, well, we're running up on time. So before we end our session today, I'd like to ask each panelist for a few final words of advice. So panelists, what's the final thing you'd like to leave our audience with today? Does anyone know their answer and ready to go? Looks like Yasleen might be unmuting.
I would say, if you want to start out credit and chances are, hopefully you guys all have a bank account. That's a great place to start. If you have a bank account with Bank of America or Wells Fargo or Chase or even someplace local, go to that bank or credit union first and let them know that you want to start establishing credit. And a lot of them will have, should hopefully have a program that they can help you get a small credit card. But I think that's a great place to start since they already know you. They can see that you have some money in the bank. They can see that you have a paycheck going in, and chances are, they'll give you a little bit of a better rate. Hopefully, it may not be 18%, it might be 15%, like, because you already have a relationship with them. A lot of times with credit, relationships are important because of that history and knowing that you are financially responsible. But I think that's a really great place to start, is go to your bank and just talk to them about wanting to start building credit, and they should be able to help you with that.
Thanks, Francesca. Chang or Yasleen?
I think it's very important thing is build your credit as early as possible, starting now today. And take responsibility for the things you buy, the things you use your credit, you pay them back, and make it a habit to check your credit score regularly. It's just like a monthly or few other weeks, just check it and make it a habit. And so before you buy anything, then you just think about what's gonna affect my credit score, and don't wait until you have found your dream house and you realize you can't take that mortgage loan. That's too late.
Thank you, yes.
I would say my advice is really do your research, right? The more informed you are, the more you're able to kind of break down all of this like mystery around credit. Credit really doesn't have to be scary. When I first started getting my credit card, I went on nerdwallet.com, and my first credit card was a Discover student card. And it slowly, as I started learning more, understanding, how a credit score is calculated, what tips I should be, or steps I should be taking, so that way I'm building up my credit score. It just really helped to just stay informed, and what Chang and Francesca have said. Do your research. It does not have to be scary. It really isn't. Building credit will really help you in the future as you navigate your life post UCR.
Cool. Well, thank you all again so much for joining us today. On behalf of the University of California, Riverside, I want to thank all of our participants for joining us today for our Life After College event. It was a pleasure to connect virtually with each of you all today, and we appreciate making the time to be part of today's event. Hope you've gained some valuable advice. I'd really love to thank Chang, Francesca, and Yasleen for their time, generosity, and commitment to UCR and the Alumni Association. The insights and advice that you provided has made me especially proud to be part of the UCR community. And even as someone quite a few years out of college, I gained a lot of information myself today. So really appreciate all of your expertise and sharing it with all the Highlanders present today. To our participants, you'll receive a follow-up email containing a recording of this webinar. as well as some of the resources that were shared throughout today from our panelists. If you do have, other things you're interested in, please visit alumni.ucr.edu/career services for further details on other episodes and to view recordings of past webinars we've had. We also encourage everyone today to sign up for the UCR Career Network, which is a free online networking and mentorship platform that the UCR Alumni Association launched last quarter. This is a great way to connect with other Highlanders, just like the few you joined us today, to gain some great networking and mentorship expertise from other Highlanders that have great expertise in areas like this. So I encourage you all to join that platform if you haven't. But again, thank you all for joining us and have a great rest of your day. And thank you again for joining us today.
Thanks.
Bye,
Thank you.
everyone. Good luck.
Bye, everyone.